What's up, y'all? This is Matt Garland, NMLS number 58700, but better known as MG the Mortgage Guy.
And my name is Quiana Watson, license number 317576. I am your broker extraordinaire.
Let's go.
Welcome to another incredible episode of the Rants and Gems Show.
Absolutely. Look, man, it is Hump Day Wednesday. It is November. It feels great outside. You look amazing as always. I feel like a young Thundercat. Like life is great. We are alive. We are blessed.
Alive and blessed and well. And it has been a great year. We have been putting out a lot of information with Rants and Gems this year. And I really feel like our viewers are ready for something more.
Oh, let's first of all, while we're speaking of our viewers, right?
Yes.
Let's give a big shout out to everybody who's been supporting Rants and Gems on all audio outlets, right? First things first, I want to say that I'm proud to announce that we have reached a major milestone. We have over 1 million downloads on Rants and Gems on Apple. Thank everybody. Thank you for your support. I mean, this is incredible. We started Rants and Gems June of 2021. So it's been a 16-month run, and we already hit 1 million downloads. So thank you guys for your support and all your reviews. We really appreciate you guys.
Yes, we do. Thank you guys for your support. Thank you for listening to us on all podcast places. And
Absolutely.
You share it with a friend. Y'all be selfish with the information. Share this with 5 friends every time. Share it with 5 friends because we are giving you guys real game about the real estate industry and how you can achieve your real estate goals.
Absolutely. We are a top 50 investing podcast on the Apple charts as well. So again, we appreciate you guys' support. You know, we're not out here talking no ratchetness. No, we're talking, sometimes we cut up a little bit, but it's amazing to think that us as 2 licensed professionals can get on this TV, so to speak, and talk about real estate from a non-biased perspective and give people real information that's helping them execute on their goals, man. So it's humbling, you know what I'm saying, to say the least. So I'm very, very grateful, and I appreciate everybody's support on this one.
Yes, I feel the same because it's very rare. And I listen to a lot of podcasts, and me and Matt talk about it all the time about how we're growing, and we're growing at a pace that's good for us because we are sharing information.
Mm-hmm.
We're just 2 professionals with a passion for real estate, with a passion for people, sharing how you guys can build wealth through real estate. So thank you for supporting us. Thank you for listening. And thank you for just always, having our back. Like they really be going hard for us. So
Absolutely. And y'all go hard for us, man. Please drop some gems in the comments for us, man. Drop the gems in the comments for yourself for supporting Rants and Gems. We really, really appreciate you. And on that note, let's segue into our big announcement, right? Because you guys have been emailing, DMing Rants and Gems page on TikTok and on Instagram, and y'all been asking for it. So now we're going to give y'all some breaking news alert real quick. Talk to them, Quiana.
Okay, breaking news alert. You guys have been listening to us. You've gotten all the knowledge that you can receive strictly from the podcast. Matt is a force when it comes to the mortgage industry. He is so knowledgeable. He's shared so much information with you guys. And I myself, when it comes to real estate investing, brokering, marketing,
extraordinaire.
I am the extraordinaire. So together, we are Rants and Gems.
Yes.
And now you are going to have the opportunity to learn our ways, our marketing, our branding, monetization, all of the information we know about real estate in our upcoming masterclass.
Absolutely. I can't wait for y'all to be a part of this masterclass. It is happening on November 26th, Saturday, November 26th, from 3 to 7 p.m. Eastern Standard Time. This is a virtual experience as well. This is not an in-person experience. So no matter where you are, all over the country, or hell, we're global now. So all over the world.
All over the world.
All over the world, right? So if we get a large concentration of people who coming from all over the world, we'll throw in a little extra how to buy real estate in the US too, a little segment for y'all, how y'all get financing as well. But right now, we're going to discuss branding, marketing, monetization, and how to position yourself in the real estate business during a global recession. So go to, what's the website, Quiana?
Go to www.rantsandgemsmasterclass.com. That is www.rantsandgemsmasterclass.com to join us. Get your tickets today. I'm telling you, they are going to go fast.
No, they're definitely going to go fast. Limited seating is available, so make sure y'all tap in. The link will be in the description as well. So y'all tap in with us, all right?
Tap
So,
in. This is going to be amazing. This is going to be incredible. And the energy that with me and Matt, it's just anyone that has attended, drop a gem in the chat. Anyone that came to our meetup that we had in New York, anyone that has attended any of our events, met us at Invest Fest, seen us together, seen us on stage. Like what I love about Matt, his energy is just infectious. And us together, we have this thing where we want to out teach each other. We want to make sure that we are giving you guys the value you deserve, but you walk away feeling like you can do this too. So get your tickets today. Rants and Gems Masterclass is going to be lit, and we're going to be together.
absolutely.
I'll be
And
in New
when
York.
she's going to be in studio, right? In studio, right? Garland Media headquarters. And we're going to do this together. So, you know, the energy is going to be phenomenal. It's going to be a whole vibe. So tap in. Link will be in the description. Rants and Gems.
Below, rantsandgemsmasterclass.com.
All right, so let's get on with today's show. Again, like this video, share it with 10 people, and let's get to some news. Right, first of all, let's thank our brand partner, Zillow. We appreciate Zillow and all that they do. All right, so you ever catch yourself browsing at 3 a.m. on Zillow.com? Me too. I know it's easy to do. Finding and getting a new home on Zillow is just as easy as baking a cake, right? You can take a closer look at homes on the market with thousands of listings. You got virtual tours, you got interactive floor plans. You can compare side by side. You can look at your mortgage payments. They got calculators. I mean, they got Zestimates. They got the comps. They got everything that you need at Zillow.com, right? So if you're looking to buy a new home, make sure you guys go to Zillow.com today. Links, we got some good resources for Zillow in the description of the video as well, so make sure you guys go on Zillow.com. Last week, when we did last week's episode, we showed you guys how to look at the data, the housing data and stuff like that on Zillow, so don't forget that too. Watch last week's episode of Rants and Gems, and you can find the links in those descriptions as well. We'll put them in this link too, but just go watch that and you'll learn how to navigate their website and to look at data. So shout out to our good friends at Zillow.
Shout out to Zillow.
Yeah,
Great partners.
amazing partners. Shout out to Ty. Shout out to everybody over there. We appreciate the love and the support. So let's talk about today's topic, right? Trillions in equity vanish from the housing market in the third quarter, Quiana. That's well, what happened? What I do, Quiana?
Because he had to jump right into it, y'all. Let me tell you, I barely wanted to introduce this article, and you had to just jump right into
All
it.
right. Let me slow down.
Trillions in equity has vanished from the real estate market.
All right. So tee it up. Tee it up for them.
Let me tee it up. The market has shifted quite a bit. And there are some homeowners that have lost trillions in equity. How in the third quarter, and we're going to talk about it. Let's talk about it. So the bright spot about this is that equity positions are still 46% over the pre-pandemic dip levels, according to Black Knight. So what we're seeing is, yes, you are losing some equity, but a lot of that equity was inflated. It was basically, we had triple digit appreciation values that were just unprecedented. And now we're just getting back to normal for most markets. So don't be too fearful. You may not have lost all of your equity, but you certainly lost your inflated equity.
Yeah. So, I mean, they're saying that about 1.3 trillion and recent added equity vanished from the housing market in the third quarter. I mean, that's a huge number. Obviously, homes are now. Let me say this: when you read headlines like this, let's keep it real. This does not mean a market crash. Let's be very clear. We all know over the past 2 years it's been up and it's stuck. This is the men lied, the women lied, the numbers don't lie. Now, instead of us being at 20 plus appreciation, we are now, depending on the market, 7 to 15% in appreciation year over year right now, November 22 compared to November 2021. So homes are still appreciating, whether you want to believe it or not. Now, we both have been on record have saying that next year we think the appreciation is going to be anywhere from 2 to 7%.
Correct.
And a lot of economists have said the same thing. Actually, we're going to have an economist on the show from Zillow in the next couple of weeks. So y'all stay tuned for that. So that's going to be a great conversation. But this does not mean the market crash. Home equity is still up. The average borrower's equity was declining about 30,000 from earlier this year, but home equity is still up in the trillions of dollars. Um, it's still record pace. So
Absolutely.
there's
And
still a lot of tappable equity out there.
correct. And, when you look at the articles and you look at the numbers, there is so much tappable equity that is still around 20%, a 20% stake. So that is an all-time high, which is 11.5 trillion in
Yeah.
the second quarter of 2022. So what you guys want to know is that figure may have declined by 1.17 trillion or just 10%. So 10% when you look at it from the huge picture. So you guys still have equity, it's just the inflated equity that went down. And what I want people to also be mindful is the home prices are dropping just a little bit, not a huge amount, but we are seeing that the median home prices are reducing. They've reduced 0.52% in September. So that is a good 3-month streak of declines. No, that does not mean the market is crashing. That means that overpriced homes are prices that were very aggressive in their pricing. They're reducing their pricing to be in alignment with what the current market demand is.
Yeah. So now when you look at the decrease in the drop, right? You said it's less than a half a percent dropped.
Mm-hmm.
Let's literally put that into perspective, right? Perspective is key. The home equity is hit an all-time high of 11.5 trillion, you just stated,
Correct.
in the second quarter of this year. So even with a decline of about 1.17 trillion, you still got about $10 trillion worth of equity. Like I said, trillions and trillions of dollars worth of tappable equity where you guys can go and tap into that and make wise decisions to continue to build your wealth on. Now, do I think that this trend will continue of a decline? Absolutely. It has to decline, but sellers will still sell homes in this market and buyers will still buy. Like, yo, if you look at how many homes are selling right now at almost asking prices, 99% of the homes are selling at asking price,
Yeah.
and then like 30% or 32% of the homes are still selling above asking price. Now,
Absolutely.
it's so people are still buying, but I will tell you guys, don't be out here paying above asking price. One thing about it, we've never told you guys to pay above asking price. We tell you to negotiate and be smart.
Absolutely. And I think that, and that's another conversation we'll end up having a little later on. But most people were paying above asking price because of the pent up demand from coming out of the pandemic. And we'd had such limited inventory, and so many people had the desire to become homeowners at that time. So, and a lot of people were, coming in and transferring from state to state. So we saw a lot of that pent up demand in our industry, but things are still correcting. But let's be clear, despite the price corrections, home values in the nation's 50 largest market remain elevated by anywhere from 19 to 66% compared to the start of the pandemic. So, if home prices or home values are still holding steady, those corrections that you guys are seeing, you're just seeing a correction where we're getting back to, again, they were very aggressive on their listing prices. And now, humbly speaking, our sellers are okay, we can't get over this way. Let's get back to fairly pricing our homes so we can get them sold. That's what you're seeing in the market. So people still have a lot of equity. Your equity positions for those that already own real estate is still strong. We are at 5 trillion, 5 trillion when it comes to equity positions. So what that does is that the average mortgage holder is still up by about $92,000 in equity. So that's still a big win. A win is a win, right? You're still winning. You're just no longer going to be able to win at those overpriced, overinflated numbers.
No, you're definitely winning right now in today's market if you are a homeowner. If you purchased in the past few years,
Mhm.
you're winning, right? It should. If you purchased within the last 30 years, you're winning, right? So now we've said all of this to say there's always a good time to buy real estate. There's never a bad time to buy real estate because it's all about your opportunities and the opportunity cost if you don't get into the market. You see, we're talking all this big number. We're talking trillions of dollars worth of money. These people who are have that equity, they took action. They're not sitting on the sidelines. So you have to look at this news, take it for face value, understand what the intent of the articles are be is to inform, but also to scare you at the same time with these headlines. But you have to understand that there's money in real estate, baby. Like,
It's a lot of
no
money.
matter what's going on in the market, there's money in real estate.
And there's always money in real estate. And let me just put these numbers into perspective. If there is 5 trillion in equity, right? And people are always like, everybody overpaid. There are fewer than $500,000 homes. That's 500,000. That's the 500,000. Fewer than $500,000, 500,000 homes are underwater. Underwater means they overpaid for the property. So out of trillions of homes, you literally have only 500,000 that paid over asking. That to me does not, it is not in alignment with the market crash. That is a market correction. And to those homeowners that are underwater, you have to look at different options so that way you can keep your homes. And we hate that that happened to you. But at the same time, the vast majority of homes at this moment are doing well. They're thriving. We have 90,000 plus in equity.
Yeah, I mean, look, let's call a spade a spade. There will be people who go underwater. There are always going to be people who buy at the peak but pay above the peak, right? And if
Yeah.
they live in certain areas, yeah, they're going to probably be underwater if this market continues to decelerate, right? But that I don't think that's going to like hurt the housing market. We're not talking 2007 and 8 and 9 where you had 10 months of supply. We're talking about a market today where you have 2 months of supply right now.
Yeah.
Three months depending on what market you're in. So that supply factor is still it's not enough of it for these underwater homes, even if they hit the market as short sales, it's not enough to disrupt anything.
It's not enough. And then the sad part of it is, as a real estate professional, I see it every day. People get pre-approved, they're ready to buy a foreclosure, they want to get a short sale, they're looking for a deal, as you should. But you are, the key word here is you got mortgage approved and you're competing with institutional buyers and also those investors that have been holding on to their cash, waiting for the day to come to get a deal. So even if there are some deals on the market, there are a small amount of foreclosures, there are a small amount of short sales. If you are financing, you won't be able to take advantage of those deals. They're already going to be sold to cash investors. So then we're back to square one. What do you do as a first time buyer or second time buyer looking for a deal? You need to evaluate the deal and understand your positioning, because you're waiting for something. If you're waiting for the market to completely crash like it did in 2008, it's not. So
No,
you're waiting for something that's not going to happen.
yeah, no, this is definitely not going to be nowhere as near as bad as 2008. I don't think we've had that conversation. I actually taught a class last night about this. You know what I'm saying? Like, this is definitely not going to be 2008. But let's talk about this, right? I'm glad you said 2008.
Yes.
Talk about, because we gave you the doom and gloom. Let's talk about there's never a bad time to buy real estate. I want to show you guys something, right? I'm going to put something on my screen, and I taught this in my class last night, but I'm gonna show this to y'all too.
I
Right.
love it. I love it. I can't wait to see these numbers.
So let me show you guys my screen here, right? So here you're looking at, you know what? Let me go back to here. Let me make it so it can look better. All right. So you're looking at this is over the past 30 years, right? The percentage change in home prices since 1991. Now, I know a lot of our audience, you probably were just born in 1991, right? You
Shout
know,
out to you guys.
shout out to you guys for tapping in with us. We really appreciate you. And this is why we like to show you guys numbers and stats because a lot of you were in high school, probably, you know what I'm saying, when the market was crashing and you really don't know what was really going on. And you hear a lot of people on the internet, TikTok, Instagram, YouTube, they talk about the doom and gloom. while we sit here and we talk the completely opposite, we're trying to give you a long-term perspective on real estate. This is not a short-term game. But if you look at over the past 30 years, look at the increase in home prices, 290% increase over the past 30 years. This is absolutely incredible. And this just goes to show you
Yes.
there's always money in real estate and there's an opportunity cost for everything. And over the past 30 years, think about all the events that has happened in America, right? You had 9/11, God bless the dead. You've had multiple recessions. You had a great recession. You had housing market crashes,
Yes.
right? You've had COVID-19, monkeypox. You had everything under the blue sun. You've had Y2K. Remember that? The dot com.
Yes. The Y2K, the dot com.
You've had everything. You've had Michael Jordan. You've had you've had Kobe
Kobe
Bryant.
Bryant. You've
You
had
have LeBron.
everything.
You had Yankees winning mad chips. You had everything. You had
You
everything.
got the Atlanta Braves winning the championship.
You got everything in life that you could think of over the past 30 years. And look at how much money has been made in real estate. Look at Colorado. Look at Utah. Utah's up 621% in the
It's
past 30
incredible.
years. Like, really look at this. You can go to Montana. Montana real estate is up 571%.
That is
Right?
incredible.
Like, look, there's nothing on here, this chart that shows negative growth.
Nothing.
Nothing. No state in America in the past 30 years has experienced negative growth. That has to show you guys this is a long term game.
It is absolutely a long term game. And when you look at this, it should just show you real estate is always a great investment. No matter what, market up, market down, interest rates up, interest rates down, brick and mortar real estate itself, when you buy in, and be mindful, you get the deal when you buy in. You
Yep.
don't get the deal later. You get the deal buying in. So get you some good representation and still consider buying real estate, because a lot of you guys are just holding out. You're waiting for the interest rates to fall. Y'all were, when the COVID first happened, right? I had so many people. I said, these rates are 3%. Let's buy a house. No, we're going to wait for the market to crash. Market never crashed. And now they got 6% interest rates.
Mm-hmm.
And guess what happened between then? The home price values went up. So now you have to get less home for the same dollar amount because you waited. The cost of waiting is going to always cost you a lot.
Absolutely.
So when it comes to real estate, the cost of waiting is going to cost you the opportunity to purchase the home you desire in the location you desire at the price you're comfortable with. Because one thing about real estate values, if you are purchasing right, they will always increase. It's not a matter of when, it's just a matter of when. Now, different areas, different situations. Atlanta is in a growing market. We are skyrocketing when it comes to appreciation values. California is skyrocketing in appreciation values. New York is actually doing well, but they're holding steady because y'all have appreciated so much. Over the last few years. So if you look at each state, Texas has a huge value proposition because they have a lot of new builds. So when you look at different states and what they have to offer, look at the values that are happening and make sure that you are investing in real estate. You get you a trusted professional and you get your deal when you buy. You're not, stop waiting for something that's not going to happen.
Look, real estate, real estate, real estate. This is like a proven asset class. And we're showing you in black and white basically. Screenshot this, ladies and gentlemen.
Yes.
Think about over the next 30 years the opportunity that we're all going to have. I
Huge.
personally believe we our appreciation over the next 30 years of our assets can potentially go up because people are going to make more money. Technology is evolving. There's more millionaires being created every single day, like never before. There's a lot of opportunity here. So, like Quiana said, just make sure you out here buying right. And this is for the primary residence, the first time home buyer, the vacation home person, the real estate investor, the developer. This is for anybody that is looking to purchase any type of real estate. You have to buy right.
Yes, and make sure like you follow trends, but don't let the trends
Stop you.
happening really guide you on what you should invest in, because I was just reading an article, and this is just kind of something I wanted to put out there about Airbnb. All these people are stuck with these mansions, these multi-million dollar Airbnbs, because now that market is saturated and people have, the pent up demand has subsided. The hotel industry has stepped it up. And there is this show going on about Airbnb. People are tired of getting an Airbnb and becoming a maid and a lawn care person and a cleaning person. So if you over invested in property with the hopes to only Airbnb them, I hope that you had a second strategy that if this doesn't work, this is how much I can cash flow to the everyday renter. Because what we have to do is stick to the basics. People are always going to have to pay for a place to stay. They're not going to always have to pay for an exotic place to stay, and they're not going to always have to be somewhere that there is a huge, vacation home, but they will always need somewhere to lay their heads. So if you made smart investments that were dual investments, you should be able to slide right out of the Airbnb if it's not working in your market and get you a renter and still cash flow and still create a wealth for your family. So this is a warning to you guys. Do not jump on the trends. Stay focused on the long term. This is a marathon. This is not a sprint.
I'm glad you're mentioning that, right? Because I think it's very important that people don't they have to understand how to navigate and move when the market moves.
Yes.
What worked yesterday doesn't mean it's going to work today. I was actually having a conversation with a couple loan officers this week about the same thing, about being able to pivot in this type of market. What worked last year is not going to work now.
Mm-mm.
So especially when investing, if you are just buying, holding, landlording, long-term tenants, whether it's Section 8 or whatever the case may be, your adjustment has to be your cash on cash returns, because you have higher mortgage rates. So you're leveraging, you're using debt service. So you may not be able to get a 15% cash on cash return. You might have to be good with a 10 and look down the line on a refinance. And if you refinance and drop 2-3 percentage points in the future, how is that cash flow going to look, right?
Correct.
Is it going to hit those numbers that you want to be at? And if it does, then bet you go forward with the deal. If you're investing, if you know you got mansions, you got to go secure you a long-term tenant, only if you are in an oversaturated area for Airbnbs. Now, if you got like dope properties where people just, the money's going to reside there, then I think you're fine. Like certain places like LA, Miami, I think those Airbnbs would do really well. But I think if you're in areas like Georgia, you're in areas like maybe
I mean, I can say it. It's true. It's true.
Right.
It's changing.
It might hurt you a little bit,
because people is, think about it. Like even New York, like I don't even see them as popular in New York. If I go to New York, I'm saying I need service.
I think in New York, it's never really been a big Airbnb market.
Look at the hustle and bustle it takes in that city. When I give me the bellman.
Hell yeah. No, when you staying in New York, I want all the bells and whistles. Even when I get a room in New York, I want all the bells and whistles. How dare you tell me about an Airbnb?
Correct. And so even
I
think
room
it's
service.
also happening in LA. With everything going on, I think the world itself is just shifting. People are thinking differently about their quality of how they want to vacation. So you have to be in a position where your Airbnb made sense. And if it doesn't make sense for Airbnb, VRBO, vacation rentals, wherever it is, pivot and find something else to do with it. But I hope that a lot of people didn't make those bad investments, because there's a huge article out about it. And
you gotta be careful. You gotta be careful, especially with the way the economy is going. Just be careful, guys. If you're doing any of the short-term rentals, if you're doing content spaces, just make sure your content space is dope, and you got dope service to match it. Because if you got that, like even me and Tooks was having this conversation today. We're about to start renting out Garland Media, right? And being able to help other podcasters, because I was going to buy a building, but the building I was going to buy fell through. So I'm like, you know what? We got enough space to really start, and we can help creators like that. You got to you got to have a brand and a niche. And that's why we're doing the masterclass also. So to show you guys how to really run it up. How to survive in this recession. If you want to do
what you're doing,
content spaces, if you want to do Airbnb. So we're going to discuss all of this in the masterclass, by the way, but just know how to adjust.
And I'll talk about, even from my perspective, you guys know I'm in the middle of building out my office, but I took an entire office space and it's going to be a whole content room. And in between time, media runs the world.
Mm-hmm.
People are going to always want to go somewhere where they can record media. And that's with me dropping more information, with me giving other people the opportunity to film in that location. When Matt comes to Atlanta, him and I'm able to film in that location. Like, we got to talk about how you can create things that are going to monetize. Everything has to monetize some type of way, because as we go into a shifting market, that becomes more important. You know,
Multiple streams of income is the
multiple streams of income.
only way to survive. And then when you're doing real estate, you gotta be creative with your properties too. We gotta talk more about traveling nurses and
Oh, yeah.
traveling nurses, flight attendants. Maybe we'll
Love,
have.
I can't wait for us to teach that in the master class. I have a niche of shout out to my traveling nurses and my
Yes.
attendants, because I keep one thing, I keep all the great. I got all the female clients in Atlanta. I'll just say I got a great Rolodex of amazing flight attendants, as well as traveling nurses, and that creative financing and the way that they're able to get into their homes. That is a niche in itself, and we have mastered it. So we can't wait to talk about that in the master class, because you guys deserve to purchase houses too. You just need a lender that understands how you collect your payments, and to help you understand how you should collect your payments.
Oh, absolutely. So I think that's a good segue into, let's talk about a program that's rearing his head back out. Say this program was around during the Wild Cowboy days. They used to do like buy downs and things of that nature. And they brought these programs back out. It's a 2-1 buy down, right?
Yes.
So let's talk about the 2-1 buy down, because this has become very popular in the past couple months with interest rates being at an all-time high, right? No, not an all-time high, but being higher, I should say, than what it was a couple weeks ago. But the 2-1 buy down is definitely a great product. Drop in the comments if you guys ever heard of a 2-1 buy down. Put yes in chat if you heard a 2-1 buy down. Put no in chat if if you haven't heard of a 2-1 buy down, because we'll break it down for you guys a little bit right here.
Yeah,
Let's.
and it's great to know these things. So you guys have to know there's more than one way to approach home ownership. And as I was talking to Matt, I said it's crazy to me as a real estate professional, and this is my quick little rant, that last year you guys were willing to spend 20,000, 15,000, 30,000 above asking price to win a property. Now, granted, you had 3% interest rates, but you were willing to pay above asking. And when you pay above asking price, you can never get away from that price. The price is the price. But now we're in a market where we can negotiate 15,000, 30,000, 50,000 off of the asking price. The only difference is you have an interest rate that is not attached to you for life. It is a interest rate that is here just for now. And when rates change, you can always refinance the rate, but the purchase price is something that sticks to you. And you guys are pulling back. And it's very surprising to me that you don't understand these different programs that can help you. So, which is why I'm so glad that Matt is about to teach you guys about the 2-1 rate buy down. So I keep hearing this corny little saying, and I'm going to have to say it again. Marry the house, you will date the rate.
I
And
had a whole rant on that on my live the other day. Like, I hate when they say that.
I hate it. I hate when they say it. And in my opinion, my best words to tell people is this: and when you purchase a property, that home purchase price is something that's on a 30-year mortgage, but your interest rate is not. Your interest rate can be changed at any time with you refinancing out of the mortgage. And when you think about it from that standpoint, and the way that home prices are increasing throughout the country, getting the home price that you want right now should be your priority.
Yeah, I mean, 100%. But I hate that marry the house, date the
I
rate.
hate it too. It's the corniest thing I've
I
ever
get
heard.
where they're going with it, but it's just like, all right, whatever.
They wore it to the ground.
Yeah, just refinance. We're just gonna refinance it, right?
Let's
Like,
just call it what it is. We're gonna refinance out of a high interest rate into a lower rate. It's all right.
exactly, right? But I get the concept. So look, for those of you who don't even know what a buy down is, a buy down is basically when you're buying down your interest rates by using mortgage points, right? A point is 1% of your loan amount. So let's just say, for example, you have a $500,000 loan. You want to spend 1 point, that equals to $5,000. Now, typically, when you do a buy down, a rate buy down, a traditional rate buy down, I should say, 1 point buy down will lower your interest rate by 0.25% to 0.375%. So a quarter to 3/8 of a point. So if that rate started at 7% on a 30-year fix, for example, and you spent 1 point, your rate will go to 6.625% or 6.75, just depending on the lender. 2 points will probably get you a half a point buy down or 0.625%. So when you pay in points, I'll say this: you always have to look at your recoup time. Like, how much less is your mortgage payment going to be if I pay 2 points for a half a point, right? And how long would it take me to get my money back by the monthly savings? So that might be a good situation to look at if you're in the market, if you're looking to, get a lower rate. Another option is the 2-1 buy down, which is a great option right now, today's market. Now, you as the buyer cannot spend your money to do the 2-1 buy down. The 2-1 buy down fee has to be paid in the form of a seller's concession. A seller's concession is when the seller is agreeing to use equity in the home so you can finance your closing costs.
Mhm.
Now, for an FHA loan, the max seller's concession is 6%. For conventional, the max is 3%. Now, let's just say if you have a $500,000 sales price and you're doing a 6% seller's concession, right?
Yeah, give me the numbers, Matt, because that's what people need to see. They need to understand these numbers.
Yeah, so now that's a $30,000 concession. Now the house has to appraise for that extra money. So your house will have to appraise for $530,000 in order for you to get that seller's concession. Now your down payment will be based off of that 530, not the 500. Now the seller will still net the 500, but
Mhm.
now that 30,000 will be used to pay closing costs. Now, if you're using that money for a rate buy down, now what happens is the rate buy down, the interest rate for the first year will be 2 percentage points lower than your starting rate, your note rate. So your note rate, let's just say it starts off at 7%, right? You do the 2-1 buy down, your first year, your interest rate will be 5%. And then year two, your interest rate will be 6%. And then year three, your interest rate will be 7% for the remainder of that mortgage term until you refinance or sell the house. So the cost of the buy down is determined on how much money you're going to save over that first 2 years when you have those teaser interest rates. So let's just say 1 year you're going to save $10,000, the difference between the 5% rate and the 7% rate, right? So let's
Mhm.
just say it's $5,000 that you're going to save. And then year two, the difference between the 6% and the 7% rate, you're going to save 2,500, for example. So that total is $7,500. So now that sales concession has to have enough money to pay for that buy down. That's $7,500. As long as you have enough concession, then it can pay for that. And in this case, that we use the 500,000 loan, I mean, seller's concession, you got 30,000 on the concession. You only use 7,500. So now that difference can be applied towards your closing costs. So not only depending on how much of concession you get and how much the actual fees are going to be, like with property taxes and things of that nature, you can probably walk to the closing table with no more money out of pocket but your down payment, plus have a good rate for the first 2 years, and then hoping that the market corrects itself by that time, and you'll be able to refinance into a lower interest rate. If the moon, stars, and the sun align, obviously you have to apply and get approved and qualify for it at that time. So I'm not saying it's a guarantee that you're gonna be able to refinance, but it's an option for you. And you can do a 2-1 buy down with Freddie Mac loans, Fannie Mae loans, and FHA loans. So it's a great program, and I think more buyers, especially in this market, you have the
Yes.
negotiating power now. So you have the opportunity to really get these sales concessions and use like this 2-1 buy down to make that payment more affordable for yourself, at
Yeah.
least in the initial stages of home ownership.
And I personally think it's a great way to, it's a great way to navigate and negotiate. So if you are searching for a realtor, you need to make sure your realtor is well versed in how this works so they can break it down to you. And then when you're negotiating, make sure instead of negotiating money off the asking price, oftentimes that same amount of money you're trying to get off the asking price may not move the needle enough in your monthly payment, but the rate buy down, $20,000 reduction will definitely help with your monthly payment. And when it comes down to it, home affordability should be at the top of your list. You never want to be house poor. So whatever your monthly payment that you want to stick to, that is the number that you need to make sure that your realtor and your preferred mortgage professional run for you on every property that you're about to purchase. So you're within that specific number, and this rate buy down will help you get there.
100%. The rate buy down is it's a great look. It's always tools, and there's always things that's going to come out, whether the market is good or bad. And again, this is another thing what we were just speaking about earlier with the investors being flexible on how you're going to rent out your properties and
Right.
those type of programs. Guys, you have to be flexible too when it comes to different loan products and things of that nature. You can't just have a one track mind, because remember, this is all tools that help you build wealth, right? So a program might be here today, it might be gone tomorrow. So the 2-1 buy down was basically retired for years. People was not using that program at all. Now it's back up. You know why? Because rates are up and stuck right now at the moment. So lenders have to be super creative right now to keep the doors open, number one, to keep the economy going, number two, because remember, housing is a big part of the global economy. This a lot of you, I know you're screaming for a crash, but you really don't want to crash with real estate. You really don't know what you're asking for. You're asking for trouble, right? So use these tools is basically what I'm saying to you. And also be prepared for a lot of lenders to stop doing certain programs too at the same time. So now as new programs hit the market, you have to worry about programs that are going to leave the market. Like when you talk about non-QM loans, if you heard of non-QM loans, type
Yeah.
yes in chat, right? Or type non-QM. Can you explain what a non-QM loan is real quick?
And what I have, gently renamed the entrepreneur loan. I should have trademarked that. All of y'all are using my term.
They're
So
definitely using it.
so basically, these loan types are what we like to call our exotic loans. They're going to look at your bank statements, look at your P&L statements, and you will be able to finance your loan without the company, without the mortgage lender taking a deeper dive into you filing taxes, which is, very much so hard for a lot of entrepreneurs, seeing if you've paid your taxes. And so these exotic loans give you the opportunity to skip past all of that red tape, and you provide up to 60 days of your bank statements. They see you have the money in the bank. You put
Hmm.
down anywhere between 10 to 25%, and you're able to purchase the property. And what I love about these loans is you can also purchase the properties in your business names, which is a great resource for a lot of our entrepreneurs that want to stay anonymous. So these loans are, I'm not gonna hold you. All of my multi-million dollar deals, most of them are using these exotic loans, and it has been
Absolutely.
phenomenal for my business. I even used the loan to purchase my mother's house. I just don't to purchase my other investment property. I don't have time to go through it. If I want something, let me just give you the money down because I understand it's an investment, and I'll use the bank statement loan and be done with it, and we can close within 30 days. So these loans are a saving grace for most entrepreneurs. And right now, all the new millionaires that are being created in the world are what? Entrepreneurs. So these non QM loans have been amazing.
No, they're phenomenal loans, but I want you guys to please understand a lot of those banks will go out of business who are doing those loans, right? Because
Ooh.
production is down, and don't be surprised when you start seeing this all over the news soon. But production is down, so banks will stop taking applications that are in that space, right? That only depend on those type of loans, because it's just as volume is down and those rates are up. Because remember, they're not selling those loans to Fannie Mae, to Freddie Mac, to Ginnie Mae, which is FHA. They're not selling those loans to those folks, so they don't have those government subsidies. These people are putting this on their portfolio, meaning they're holding that money themselves, or they got private investors, right? Now those interest rates are creeping up too. If a 30-year conforming rate is 7% right now, what do you think bank statement loan is? That thing
Ooh,
like
they 12.
9, 10, 11% right now.
Yeah,
So a
they're
lot of those banks are feeling volume going down. It's going like this right now. So as it goes down this, layoffs will happen. That means they can only take a certain amount of production. And then at some point, they will have to say, I got to stop production. Now, is this doom and gloom and the end of the world? No, because when one bank goes, there's always a magical bank that pops up out of nowhere
there it is.
with
Because one thing I have
the
learned,
program.
and what you guys need to also understand, there are people with there are always going to be people with the money. There are going
Mhm.
to always be people with money that want to invest, especially when the yields are high, especially when the interest rates are high. They are more than willing to take that risk for those returns. Because when you really think about it, and I think that this would be a good way to explain it, all this money that you see coming from investors, these are people that have invested in different funds for their retirement. So this money is not missed. They trust their financial advisors. They invest in these funds. They're investing in your mortgages. And if it's 13%, they're going to have somebody is going to have some money somewhere to invest in a non-QM loan because the returns are so high. It doesn't benefit the investors as much as you guys think. When it was 3% interest rates, that's not a big, they're like, okay, 10, 15%. Oh, money is going to be coming out the sky for those that have it to
Absolutely.
invest in these funds. But what happens is it's going to be fewer and in between. And I can foresee them adding quite a bit more guidelines to these non-QM loans because of that.
Oh no, they definitely look. Guidelines are definitely going to change and across the board, right? And that's another thing you got to be prepared for in this type of market. And we're talking about flexibility, right, guys? So you got to be prepared to have your expectations that some of the programs that you know and love today might change their guidelines over the next 12 months, depending on what's happening. Look, tomorrow we got the inflation data that's coming out. We got another Fed meeting coming in December, and it's going to be real heavy depending on what that those inflation numbers are looking like tomorrow. Like the Fed is hell bent on beating inflation like it's the ugly villain. You know what I'm saying? Like they're hell bent. They think they're Batman or Superman right now. They're going crazy, right? So, but you got to be flexible because if they do raise the rates and the market continues to do what it's doing right now, this is going to be a long winter, a very long winter. You see, it's like 65 degrees in November all across the country right now. So you know it's going to be cold this winter. This winter is going to last to the spring. I said this 3 months ago. It's going to be a long winter, right? So buckle the hell up, ladies and gentlemen, because we about to. It's either you're going to get bigger during this time or you're going to sink during this time. And we want our audience to all get bigger and all to swim, right? We don't want our audience to sink. So again, this is why we give you guys this information and we tell you from our opinions because we're not going to let it stop us. We're going to keep going. We're going to
Correct.
keep thriving and smiling while we do it.
Correct. And I think that what we need to also recognize is not only is it going to be a cold winter, it's going to be a shifting year. As we go into 2023, which is why I'm excited to teach this masterclass, you can no longer float by on just having unlimited amount of knowledge and be successful when it comes to real estate. And that's purchasing real estate, selling real estate, investing in real estate, operating as a transactional real estate broker, operating as a transactional real estate mortgage professional. You are going to have elevated information that you can execute to make it, because what we're going to see is all those new people that came into the market that thought this was an easy market, they are already leaving. Everybody's already going back to work. They're going
Mm.
back to work. Their people are going back to work because they thought this was an easy market. Oh, let me just get my real estate license and sell these houses. Now you have to have strategy. You have to have knowledge. You have to understand what's going on. The time has come. So as the rates go up and we have lower inventory, what's happening with people is they have choices and they're able to make choices. They want the best. People want to work with the best. So
No, definitely. People definitely want to work with the best. And and if you are transactional professional, and let's speak to them for a quick second. Like, guys, you have to understand a lot of us will leave this business, but it's great because now it gives you more market share. People are going to buy and sell real estate to the end of time,
yeah,
right? And right now, there's a lot of reasons why you, as a real estate professional, need to be really looking at the half glass full and not half empty right now if you plan on thriving throughout this type of economy, right? We have home buyers, they have a lot of good options, but here's a couple things. They have more homes to choose from right now. We know inventory is going up,
Yeah.
right? Inventory is going up only because homes are taking longer to sell. On average, homes are selling in 32 days right now, which
Yeah.
is great for the market because that's more normalcy. So now when you have that type of time, now you have more products and programs that can accept it, right? So now that NACA home buyer, that VA loan home buyer with 100% finance, and the person who's maybe getting a down payment assistance program, someone who's doing an FHA 203K, now those type of offers on those type of product and that buyer will probably get accepted in this market. So that's a good thing, right?
Exactly.
That's a good thing. Are you seeing more of those type of programs and things like that for throughout your firm being accepted, Kiana?
Absolutely. And what I also notice is that people are really, you know, you're forgetting the fact that now is a good time to get a deal. The programs are out there, they're popping up all over the place. Everybody has a program from the 1% down with Legacy Homes to I know another company in DC, they're giving away $250,000. I don't even know how they're doing it for buyers. So I personally think that if I were you in this market, I would look at different programs that are available to assist with my out of pocket expenses so you can be successful in your home buying journey. And those programs were really popular a couple of years ago. And I remember building a whole book of business. This was when MG first met me on Instagram, and I was the down payment assistance queen. Hey, this. And then the programs went away as the market began to thrive. Now, and then when COVID happened, the programs literally stopped funding. So now
Mm-hmm.
that there's funding, even though you see a slightly higher interest rate, there's opportunity for you guys to purchase a home with very limited out of pocket expenses. So you're still win. A win is a win. And I think that as a home buyer, if I were you, I would focus on the win. And that is a win for you all. Even if you have a temporary high interest rate, I say temporary because you can do what? Re
Refinance.
exactly.
Yeah. Now also look at the bright side too. Bidding wars have eased, right? We have a lot of bidding wars that, I mean, across the country are just they're disappearing. Although
Yeah.
homes are still 99% of homes are still selling close to asking, there's not a lot of competition no more. So now I know there's a lot of content out there that says you should be making disrespectful offers right now, but the numbers don't prove that that works. Like,
I'm going to tell you now,
I'm just trying to
those
tell you, the
numbers have
numbers don't prove that works. I'm sorry.
no, I can tell you right now, the results say that is a lie. You do not like like even when we're looking at the number of homes that can sell and the percentage that they're selling at 98% on average. Some places are still at 100% depending on the school district's location and the quality of the property. So if I were you, instead of trying to have a blanket answer, oh, the home is on the market, let me offer 80% of asking, make sure that you have a professional that is actually running the numbers
Word.
so it's in alignment with what you're looking for. And you are not going to, I don't care what market we're in, you're not going to get the hottest house on the block for a deal. The hottest house on the block will still sell for top dollar. You or if you're looking at the least hot, if you're looking at the ugliest house on the nicest block, then you may have some room for negotiation, but maybe not, because at that point, now you're competing with who? Investors who have cash that are looking to invest in single family homes. So if you are a buyer, your win right now is that you are not going to have as much competition. Paying 30, 40, 50,000 above asking price is not happening as much. And you also have the opportunity to use programs that are available to help you with your out of pocket expenses.
Yeah, and I think it's very key. That's why I mentioned these products earlier, especially like the 203K and the Fannie Mae home styles, these rehab loans. You guys got to start now going into looking at these properties. And we've said this all the time. You look at the worst house in the best neighborhood, right? And you fix that thing up. This is the time now. Those offers are going to get accepted.
Yeah.
Those offers, those homes will now you'll be forcing your appreciation versus you paying at the sticker price because you buy something that needs work, is distressed. And now, when the correcting market, you honestly want to be in that game right now, even more so than ever. Because let's face it, there's a lot of still cash and money in the streets,
Correct.
but a lot of that's dried up too. Like, so even the people who was
Let
out
me-
here with all the
can I
money,
can
it
I
dried up.
can I say something?
It dried up.
Okay, this is spicy Q, and I do not like
Oh
to talk
Lord, here we
about
go.
I do not like to talk about politics, but I'm going to say this. There were a lot of Black people as a whole, not saying this is a generalization, vote Democrat. It's just what we do, right? Most of them. There were a lot of people that were out loud, boisterous on social media, and they were basically voting Republican not because of their views, not because they believed in the views of the Republican Party, but because they said they want Trump to come back and open up the floodgates of money again. And
Wow.
I'm going to tell you, the strategy that this man had last year, a couple years ago, when he put out the PPPs and the EDLs and all these loans and made it easy for minorities to get loans, a lot of business owners didn't forget that. And a lot of them are suffering right now. There was a report that came out that a high percentage of people that own brick and mortar commercial buildings could not pay their rent in October. So
Wow.
when you're looking at things like that and you're looking at the business owners, this market is dry. Let me tell you something. Biden came in and dried it all up. He ain't giving out no money. There is nothing to save you but yourself. And we don't know where this is going to go, but I do personally feel like if the Democrats stay in office and they still have a good time there will be no one to save you. You're going to have to save yourself, and that's not going to come from a loan, because a lot of those loans they're no longer lending as much as they used to. So you're going to have to go to work, and you're going to have to produce an income. And when you're producing this income is going to have to make sense for your long-term goals. So I say that to say I just foresee us it being getting very sticky for us, especially for us entrepreneurs for a little while, especially if you are depending on loans to help float without actually creating businesses that are profitable. And that's another thing we'll touch on in the masterclass. Is your business profitable or not?
Yeah, that's a major key and a major gem. You got to be profitable. So look on the bright side, guys. There's going to be doom, there's going to be gloom, and
Yeah,
and then there's going to be oh happy days, right? You got to know how to balance and be even and be flexible during all these different seasons, because the seasons will never stop. There's going to be winter this year and winter next year and winter after that, right? It's
correct.
always going to come. So you always got to be prepared. This is why we always preach to don't be house rich and cash poor. And that goes for in business as well. And everything that you're doing in your life, you need to have reserves, you need to have backups, and you need to be super smart, especially in these times right now. So there's still money to be made in real estate. We showed you some numbers. We went over a lot of information. If you got value from this content today, I want y'all to throw some gems in the comments, because
Absolutely.
we broke down a lot. I know the title of this is Trillions of Equity Vanish in the Housing Market, but we got to show you the good, the bad, and the ugly as well. And
Absolutely.
that's why we started off with the ugly, because we want to transition to what they say is like the gold at the end of the rainbow.
Yes, it's
Like,
always like
there's
a goal.
gold. There's gold at the end of the rainbow.
And I agree. I think that we can't skip past the information. It's there. You guys are seeing it. So we want to address it head on. Yes, people are losing their equity. But at the same time, buyers are still winning in this market, and sellers that actually had solid investments that purchased at a time, you're still winning as well if you decide to sell your property.
Home prices are still up.
Home prices are still up. You just got to be mindful. Like when they always say there's let the good times roll, the good times rolled for 2 good years. Now we're getting back to normal. It's still a good time,
It's still a
but
great time.
it's still a good time. We're just getting back to normal, and be okay with knowing that what goes up eventually goes down. It doesn't mean that it plummets, but what goes up eventually goes down. I think that's what's happening in our real estate market. It went all the way up, and now it's coming down to a normal correction, not a plummet.
Yeah, and it's much needed, and I'm happy about it. It's taking a lot of the jokers out of the game, which I like personally, on all ends,
Yeah,
right? Whether it's transactional or investing or buying. And I think as long as you can survive this, you're gonna come out of this again. My goal, I know Quiana's goal, I know the whole team goal is you got to come out of these things bigger than what you are,
I
and,
agree.
and that's all we are working every day to do. We got to be consistent with our work ethics. We got to, create multiple streams of income. you can't be lazy in this type of market. Damn, this thing actually had an alarm clock. Yeah, that's the timer that says it's an hour, but like, yeah, I can't believe the thing actually had a alarm on it. That's crazy.
Well, that reminds us, I think that just the wrap up here is that yes, it's still a great time to invest in real estate. The Rants and Gems Masterclass is coming up. Go to rantsandgemsmasterclass.com to sign up, get your tickets, and we are excited to finally collaborate. Matt and I have been giving you guys so much free game, so it's exciting to come together and really do a deep dive and give you guys the information so you can be profitable and successful in this shifting market. So, rantsandgemsmasterclass.com. The link is below. And this was an incredible episode.
Yeah, a lot of information. Again, shout out to our brand partner, Zillow. We appreciate the love and support from Zillow. Make sure you guys visit Zillow.com. Today and every day, if you are out there in the market, again, they got calculators, they got virtual tours. I mean, you can see homes side by side. You can contact the listing agents directly. There's a lot of information. Mortgage calculators. I mean, the whole 9 yards. We're going to have descriptions, links in the video for some wonderful tools that you guys can use on Zillow.com. So make sure you guys go to Zillow.com if you're looking to search for a home. Thank you, Zillow, for your support and your sponsorship. Thanks to the whole Rants and Gems team. And thank you guys for 1 million downloads in 16 months. That's incredible. I'm super excited. But now we got to get to 1 million a month. Right. So make sure you guys we got to get to 1 million a month, man. Make sure you guys go support Rants and Gems on all podcast audio outlets. Download it, listen to it, rate it 5 stars, leave a review. And we would love to see you guys at the masterclass. Again, Rants and Gems, masterclass.com. Link is there, November 26th. A virtual experience you don't want to miss. We're going to talk about branding, monetization, marketing, and how you guys can really survive in this upcoming recession and thrive in this recession. And this class is for homeowners, first-time home buyers, real estate professionals, loan officers, real estate agents. Tap in. There's going to be information for everybody. I mean, this is a 4-hour extravaganza with a VIP component of it as well. So make sure we want to see y'all guys on the VIP. All right. So link will be in the description. And go pick up the books from Clear to Close. And hold on, I'm looking for my book too.
Look at me, I'm looking for my book.
There we go. We got House Economics. Links will be in the description. Make sure y'all pick up House Economics and make sure you
get Clear to Close. Broker My Blueprint for Success. You can get it on Books A Million, Amazon, and Barnes and Noble. I appreciate your support.
Go to mgbookstore.com to get your House Economics bundle. All right. So this is Matt Garland, NMLS number 58700, but better known as MG the Mortgage Guy.
And this is Quiana Watson, license number 317576, the broker extraordinaire. Thank you guys for tuning in to another incredible episode of the Rants and Gems Show.
Peace.